Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for today's battery and precious metals presentations. Our next live presentation comes from Wealth Minerals Limited. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Wealth Minerals Limited, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Tim McCutcheon, Strategic Advisor of Wealth Minerals Limited, which trades on the OTCQB venture market under the symbol WMLLF and on the TSXV under the symbol WML. Welcome, Tim.
Thank you. Thanks for that intro. Everyone here, thank you for joining my presentation. We'll be talking about wealth minerals, and let's get into it. Our standard disclosure here. Further. We at Wealth Minerals, we believe that the energy markets in general are undergoing a massive paradigm shift and had been for about the past decade. And lithium is a key part of that paradigm shift. And so we made a very early effort to position ourselves to take advantage of the collective know-how of the group that's involved, both in terms of understanding how capital markets work, understanding how mining works, and selecting jurisdictions that we believe will shine in the future when it comes to natural resource projects. The idea here is really to acquire projects where we have a competitive advantage, then in the areas where we don't have a competitive advantage, have partners in development, people who can help us drive these things forward, and then to advance the projects to the benefit of everyone, all of our stakeholders, and of course our shareholders who are investing in owners in the projects that we're doing. So that's really the key top-down thing. And then the bottom-up, which we'll be talking mostly about here in the presentation, is that there really is a problem in terms of resource availability for what's going on in the world today, this ongoing energy paradigm shift. Talk is cheap, and actually where the rubber hits the road, so to speak, when it comes to what people want to have happen, there really are issues there. And it's not just rhetoric about the chronic shortages of various materials that are required to really drive humanity forward and the way we use and consume energy. So with every company, of course, people are the backbone of making things work and making things go forward. And we have a great team. Henk van Alphen is our CEO, and he's sort of a serial entrepreneur in the natural resource space here in Vancouver. For those of you who don't know, Vancouver is effectively the Silicon Valley of the mining world. Things get incubated and started here. And then when they get to a certain level of capital requirement, they usually end up in Toronto or possibly London. But it's really Vancouver that is the primordial ooze from which all sort of major junior miners emerge from. We also have Marcelo Awad. Marcelo Awad was the executive vice president of Codelco, Chile's state copper mining company, for many, many years. Then he went on to be the CEO of Antofagasta, which is a London-listed multi-billion-dollar copper mining company, but with assets in Chile. So Marcelo is the closest thing you're going to get to royalty when it comes to the executive mining space, particularly in Chile. And then we have a whole host of other very accomplished professionals. I'll point out one in particular, Cesar Hill, who was the technical director for Albemarle's lithium project in the Atacama Salar, one of the world's largest producing lithium assets. And so Cesar is really one amongst a handful of people in the world who actually knows what he's doing in terms of how to best and effectively extract lithium from Mother Nature. Stephen Foote also, as a mention I'll bring as well, as someone who's worked in the Atacama Salar for decades and worked in Chile for decades, and he is a huge asset to our team in terms of just knowing how to get things done in Chile and also knowing the very nature of sort of lithium extraction. Board of directors, again, this is the group of people that is the intermediary between shareholders and the management, a very distinguished group of people. And again, their bios are available there. And then further on, advisory board, myself, I've been involved with wealth sort of from the very beginning, and I help them on sort of the bigger top-down issues in terms of how to drive the company forward. And Jürgen Geisinger, who was one of the top automotive sector executives in Germany for many, many years, incredibly well connected in the European automobile space and in general the machine building space. And so he is at the forefront of that continent's drive to go electric, and of course, lithium plays a huge role in that drive. No matter how you slice it or dice it, the reality is there is a lithium supply problem. If you take all of the major automobile companies' plans for their shift from internal combustion engine products to EV products, automobiles, there simply isn't enough lithium being produced right now to make that happen. So what you have is a persistent supply deficit. Now, fortunate for us, so much money and so much attention has been invested in lithium-ion battery technology, which is really driving this whole thing, that it's become the incumbent technology. So even though there's a supply deficit, I think the risk of replacement technology is actually quite low. And so you're going to have automobile manufacturers getting more and more involved into areas where they really don't want to be, which is moving upstream in terms of being closer to the natural resource sector. Some of you may know this, but Ford Motor Company used to make their own steel, and then it was only later on where all of that stuff was divested, and they unvertically, horizontally became a company as opposed to vertically integrated. And that's all changing right now because all of the consumers of lithium and all of these other materials are starting to realize that it's not enough to sort of sit back and hope the market kind of sorts things out, that the market is the consumers, and they need to make sure that supply is available. And what you're seeing is a massive scramble for assets in the world right now. The level of M&A is really mind-blowing in terms of lithium assets getting scooped up by other larger groups or combining together. One deal that just closed a month ago that's not on here is Kadal Minerals in Mali, was just acquired by a Chinese group. And this is happening at a breakneck pace. Why? Because there's a real dichotomy between junior mining companies, which traditionally, we're talking hundreds of millions of dollars, which actually is quite small in the investment space and certainly in the large industrial conglomerate space. It's barely a rounding error for them. And yet their multi-billion-dollar production plans and their multi-billion-dollar factories that they're building and everything else will come to a halt if they don't take care of these smaller investments. And the realization, which has been very slow, but it's finally started sort of coming to the forefront, which is you can't have your $5 billion gigafactory if you haven't secured $100 million worth of lithium carbonate to make the gigafactory actually make what they're supposed to make. And so this M&A activity is happening at breakneck speed because I think people in the industry are starting to realize that all of their great plans are going to come to a screeching halt if they don't address this issue. So where does now let's sort of start bottom up here? Bottom up. Wealth Minerals has two projects in Chile. One is called Ayagüe, the other is Atacama. The Atacama Salar, and we'll talk about the geology of this, but the salar is currently represents about a quarter of global production. That salar production is coming from the southern part. We own the northern part, and we'll talk about the opportunity there and sort of the optionality and the value that is attributable to the company. And then we have the Ayagüe Salar in the north, which is a project that we own, that we're really the only game in town in that particular asset. And we just came out with a resource on it, and we're driving full steam ahead to turn that into a mine to produce revenue for our shareholders and lithium for our customers. So the Atacama Salar is really the flagship project. The salar, what a salar is a dried salt lake bed. It's essentially a dimple in the earth that has water going into it, whether it be underground or above, and has nowhere to go out. And if you're in a dry enough place on the planet, that water goes out by being evaporated away, and that leaves behind all of those minerals that were in the water. You do that for long enough, those minerals basically build up and fill in that dimple, that depression. So when you see a picture of a salar with that beautiful crust of salt on the top, that's simply the last layer of evaporation that happened. Everything below that is basically a supersaturated sponge of salts, including lithium salts. We own the northern part of this salar. The southern part is owned by a company called Corfo. It's a state Chilean company, and Corfo subcontracts out to a company, SQM and Albemarle, production rights. Those production rights account for a quarter of global lithium production. SQM and Albemarle collectively have a market cap, I think, of about $40 billion. The value here is enormous. We have the northern part, and geologically, what we will show in this presentation is just how exciting it is in terms of it being very analogous to what's going on in the south. This picture you see on your screen right now, very simply, this is a result of geophysical work. In layman's terms, what you're doing is you're running electric cables along the surface and zapping electricity down into the earth. And the speed at which that electricity travels down and bounces back up gives you a good idea of what's going on underground. Now, we all know, you don't swim when there's a lightning storm outside. Why? Because water conducts electricity. Salt water conducts electricity really, really well. What you can see from this picture right here is that big pink blob. That is highly conductive material underground, salt water, essentially. And it is huge. We're talking, we'll show in another slide, it is multiple times of the size of Manhattan Island. The point is that we have a gigantic bathtub containing water, brine, salty water. And given the fact that our neighbor right to the south of us, where that basically it's cut off there by the license line, but right to the south of us, there's a quarter of the world's global lithium production happening. So it's the same blob of brine. We just happen to own the northern part of it. And that pink is a glowing pink reminder to all people watching the presentation here that is a huge reservoir of brine, and we have every reason to believe that it contains a lot of lithium salts. Go to the next slide. There we go. And again, this gives a little bit more detail on that. You can see that basin there on that picture to the right. And then you can see superimposed on that our license package. And again, this just gives you an idea of what's actually going on. A basin where water comes in, it doesn't go out. The only way the water goes away is by evaporation, at least behind all of those salts, which is really the target geologically what we're after. You can see in the picture below that it is an incredibly dry, arid place. It is the driest place on the planet. And that basically dovetails into the next theme that we're going to be talking about, which is how to properly extract lithium and how to get the best bang for your buck out of it in an environmentally safe way where everyone's sort of happy. Traditionally, the way that's done is you basically pull out the water, the brine from underground, you put it in very shallow pools, and then you let Mother Nature take 9 months or so to evaporate away the water, and then you scoop up all of those salts that are left over. It's kind of crazy to have a production methodology where you're actively trying to get rid of water in the driest place on the planet. In the past, no one really paid much attention to it because it really wasn't that big a deal because there weren't a lot of these operations active anyway. Now that lithium is at the forefront sort of technological progress, there's a lot more attention paid to, well, how are we actually getting this stuff out of the ground? And it is clear that the way moving forward is not using solar evaporation. The way moving forward is to use sorption technology, which basically means you're using a material that pulls the lithium out of the brine, and then the brine that's left over, you pump back into the salar so that you're maintaining that water level. You're not just getting rid of water wastefully, and that you're able to still get that valuable material, that lithium, out of the brine. This is, again, what we're talking about, that gigantic bathtub of salt water underground. To the left is a top-down viewpoint. That black line there is a cross-section. To the right is the result of that cross-section. And you can see it is multiple kilometers tall and multiple kilometers wide. It is a really gigantic pool of brine that we're sitting on. Again, just for scale, it always helps to get people to wrap their heads around the size of something. You can basically put some familiar objects on there, almost 8 times the size of Manhattan, 4 times the size of the Freedom Tower that we know of. We actually think it might be a little deeper, but just this gigantic 3-dimensional space full of brine, and we're pretty sure that it contains lithium. This is our project to the north. It is a smaller project. It is comparable to some of the other things that are happening in Argentina in terms of projects that have gone forward and begun production. We drilled on this project, and we're very proud to say that that drilling was successful. We came out last month with a resource about 1.4 million tons of lithium carbonate equivalent at just shy of 200 ppm, parts per million. This is well within the range of being a commercially viable project. We are now working with our engineering partners at Schmidt, who will put together a economic assessment of this, which will really be the blueprint, the template, if you will, for the next phases of developing this project. First, you come up with a resource, then you come up with an idea of how to get that resource economically out, and then you basically tweak it over time until you become to a final product, which is a financeable document that you can go to a bank and say, this is my business plan, you put in this much money, this is what we're going to build, and this is what's going to come out on the other end. One of the key things here is that Ayagüe, because it's smaller, it just has less sort of attention, and it's much easier for us as a smaller company to work there and to really, show the best attributes of what we're trying to do, namely involving all stakeholders in the development process. So we sat down with the local communities there, basically told them what we're going to do, got their input on how we can best do that, made sure that they benefit from it on every stage of the way. When we drilled there this summer, our crew was housed in local housing, and we paid for that, paid them rent for that, so they got an economic benefit from that. They were very much involved in the siting of drill holes so that we didn't do anything that basically disturbed sort of what they were used to locally. And importantly, local people there got skills that they can then transfer on to next projects, learning how to help a drill crew, learning how to be involved in all the technical equipment, so that they have skills that will provide value for them and their families for the years to come. And that's just really the template moving forward. And again, very importantly, to make them happy, and the way we're going forward as well, is to not use solar evaporation as a production methodology, to use something called sorption technology, which I mentioned, which is a much more environmentally friendly, a much smaller footprint on the planet, on the surface there, which what that means is that we can produce lithium very cheaply, in large quantities, and yet still be good neighbors to the local village and be a good corporate citizen, and really husband the natural resource there as best as possible. And again, we talked about the bathtub and electricity going through, and the faster it goes through, the pinker the color is, and this is the same thing. A very, very large underground source of brine, and knowing what we know, it contains lithium. The 43101 that we came out with in the summary of the resource that I just spoke about talks about very clearly the potential to expand this resource. We simply just need more data points. It's really pretty clear that the expansion process is really just a factor of putting in those data points, because we're pretty sure from the geophysics that indeed there is more material, meaning that 1.4 million ton LCE resource is nothing, will do nothing but grow over the coming months and years. And that's really the summary of the presentation. There are a few things that I can talk about. Solar evaporation, I personally believe, is not going to get permitted anywhere in the world today. I think maybe the last projects that are finishing up in Argentina will be the last ones that will be made. Sorption technology, one of the key things, aside from being environmentally friendly, once it gets perfected as a technology for producing lithium, it just makes more sense, mainly because when you're using solar evaporation, you're literally waiting for the sun to dry off water. That can take anywhere from 6 to 12 months. And if there's any bit of rainfall or anything in that time period, because it's all above ground, just in open air, it can significantly delay your production profile. So it's the idea of managing working capital and predictability. It's a hell of a lot easier if you use sorption technology, where you put in this much brine on one end and this much lithium spits out the other. And so you have some sort of control over the production process and predictability over that process. And so, just from a business point of view, it makes a lot more sense. And the added benefit, of course, that is much more environmentally friendly and a much smaller footprint, industrial footprint, than anything that's involved solar evaporation. So look, there's a bunch of questions here. So let me answer a few of those. let's see here. So when it comes to our community outreach, the ESG initiatives, which of course are very important, I would say our relationship with the Ayagui people is excellent. That's the project, the smaller project that I've been talking about. We've already signed a protocol with them as a roadmap for working. We had no problems. In fact, it was quite helpful working with them in the drill program we did last summer. We're working with them again to do another drill program to basically firm up that resource to have the potential to make it a reserve, as well as the opportunity to make the resource bigger. So that has been a very productive relationship, and I expect that to go forward. But what it importantly does is it sets out a flag, if you will, on the ground for our relationship with the indigenous people in Atacama. Atacama is a much bigger target because it is so big, and we just talked about this. It can't help but be political, unfortunately, because it's a world-class asset. And so, there's a lot more people with eyeballs on it. But by showing that we can work efficiently with a small sort of footprint in collaboration with the local communities, and they're happy with that collaboration, that serves as a template for doing the same thing in Atacama. So we have our people on the ground right now who are in constant dialogue with the indigenous people there to come to an agreement very similar to what we have with the Ayagui people, which will then allow us to bring in the drill rigs and put a few holes in the ground that we can finally get sort of momentum going there. And again, there's really nothing to argue about until you have a resource. If there's no resource, no one really knows what they're arguing about. So if we can put a few holes in the ground, then at a minimum, at least they can begin a dialogue about how best to exploit that resource for the benefit of all stakeholders and, of course, shareholders as well. So that's happening. I would say watch that space. But Ayagui certainly is a powerful, powerful example of how Wealth Minerals can work effectively and respectfully in Chile. So that's one bit there. Ownership is last year, the ownership makeup of Wealth Minerals. We're a public company. We own 100% of the subsidiary in Chile that owns our licenses there. Wealth Minerals is a broadly owned company. One of the key things that makes us different from some of our peer group is that you can actually trade the stock. 1 million shares a day traded in Wealth Minerals is actually pretty normal. So you can put on a position and take off a position in a liquid market. One of the things that's very important right now, given the overall capital market situation, is liquidity. It's very easy to buy stocks. Sometimes it's not so easy to sell them. And the reality is with Wealth Minerals is that there's a pretty deep market. You can buy and sell sizable positions, which makes it more attractive. It basically punches way above its weight in terms of investability because of the liquidity of the share trading. But it's a broad market. Our largest shareholder is one of our directors, David Lees. I think he owns 5% or so, 4 or 5%. And we have a few other people that own a similar position, slightly lower, but we really have no one that's above a 10% reporting threshold. It is a broadly held public company. What else we got here? In terms of M&A in the industry, I think you're seeing people who are latecomers to the M&A activity are starting to realize that they have to hurry. And again, one of the key things, that I've been, as a strategic advisor, I've been involved in the strategic conversations with potential M&A partners. And it is always very frustrating because the people who are tasked to do something don't have the authority to actually sign checks. So what you have is this really dichotomy where they are told, go out and find a lithium project that produces enough lithium for 500,000 cars 3 years from now. And those projects don't exist. And so they run around, and they obviously at some point we end up talking together, and we explain to them, look, this is where the industry is, this is where we are, and you need to be more involved if you're going to secure the supply for your plans. And then those people go back to their internal committees and boards and everything else at an automobile manufacturer, a big chemical company, or whatever, and they can't answer those fundamental questions, and so things just sort of stop. What's happening now is that finally these bigger, multi-billion-dollar companies are realizing that it really doesn't matter what my plans are, because they're not going to happen if I don't sort of get out of my comfort zone and get involved in the development of natural resource projects. And that is happening. slower than we like, but it is happening. And for wealth, the big catalyst event was coming out with the resource at Ayagwe, because at a minimum, you now have objective numbers that you can then bring to a committee and say, this is the resource that potentially could give us enough lithium to build whatever it is, 200,000 cars a year. You need those metrics to have a very concrete conversations, because eventually someone at some committee in a big automobile manufacturer is going to have to say, how much money do you need and what does it buy? And so that's the key issue here that has changed for Wealth Minerals from even a few months ago. And so that makes me very excited about the company in 2023 and going forward. What else can I say? To be honest, that's about it. The company is well funded. The series of warrants that were issued in the lean times, let's call that 2018 to 2020, they're now very much in the money. And so we have seen exercise of those warrants, which has brought cash into the company's treasury. From time to time, we do equity issuances because either we need a little bit to top up, the market conditions are correct, or if someone that we really want to be a shareholder that can provide value says, hey, I want exposure to wealth and I'm willing to write a very big check to get it, and I am willing to help introduce you or to do things as a shareholder, then we consider that, and from time to time that does happen. But I would say for now we're funded. Our program for 2023 is funded. And so what you're going to see in the coming quarters to the end of October or so is additional work done in Ayagwe. You're going to see the engineers now getting involved with the resource we came out with at Ayagwe last month. And then you're going to see the results of that in terms of finally putting sort of your hands around the economic footprint of Ayagwe and what that means for the equity valuation of that project. And what it also means as we mentioned before, a template for how Atacama can move forward. Because we're really the only company in Chile, certainly the only public company in Chile, that has gotten this far in terms of advancing a project, and then with the Atacama Prize, sort of in the background there. So thank you for your questions. Thank you for your time. I guess with that, I'll wrap it up. We're always available. You send us info@wealthminerals.com. You send your questions. I'll be more than happy to try to answer those. But once again, thank you for your time, and